Awesome, everybody. Good evening, good morning, good afternoon. Whatever part of the world you're joining me from. This is Live Pips FX, and this is another session again to look into some things into the chat today. And then, of course, by sent one or two things. Yesterday, we talked about we did what we call trading journaling, and I show us how you could properly enter the market at the sniper entering, and how we can avoid losses as well, and how you can maximize. Sorry, a minute. Sorry.
All right, sir.
Okay, awesome. So sorry about that. So we talked about showed us better ways to do that, and then because maximize profit for yourself, and then to cut losses. I showed us more how to get more confidences and get more confidence for any trade you're holding, you are trying to trade yourself. Awesome. So that's for that. So I hope you can still recall vividly what we did yesterday, sir.
Sir, what did you say, sir?
I hope you can still recall vividly what we did yesterday.
Yes, sir. Yes, sir. Yes, sir.
Very well. If you have to teach me, will you teach me? Very well. Can you, if you have to teach me, you go teach me, you go teach me. Anyway, anyway, that's for that. Okay. Today, I want us to. Do you have any question, or is that something you don't understand yet? Because I want to be so assured of doing. If you have a concrete understanding of this thing we're doing. Price action, do you understand price action now?
Yes, sir. Yes, sir. Yes, sir.
Sure.
Yes, sir.
Market structure, do you understand market structure now?
Yes, sir.
Are you sure?
Very, very sure, sir. What I don't understand is the risk management, how to manage risk. Cause I understand risk management to a point that if I'm trading just one pair, I will know that okay, this is the amount I want to reach today. Then after I've lost that, I won't get into the market again. But That's the reason why I chose to be trading just one pair, just to manage risks. Sometimes if I win, then I win, and if I lose, then I will do all that. That's the only trade I'm taking. But trading multiple pairs can be tricky.
You can't be like me. Oh. Don't try to be like me. I'm just crazy guy, you know. It's been a while. You know, I've been doing it for so long. So I should keep doing it. You will be able to trade multiples. Okay. 30 minutes, I can analyze 20 pairs. 30 minutes. 30 minutes is too much. And that's it. Once I see, I didn't know what to do. I didn't know if I'm buying or selling. I didn't know if I'm shorting or longing. So I see market structures and price action. I didn't know what to do. So
Answer. I want to ask a question, sir.
Yes, sir.
Depend, like, if you are to judge me now, like, how many percentage can you give to me?
Until I give you exam, sir. Until I give you exam, sir. I'll give you exam. Close some of those stuffs. If I become a lecturer, I'll be so strict. Until I give you exam, I close some of those stuffs I've thought we have done.
Okay.
Yes, I'll be able to. I'll be able to. But what I know that you're not more a newbie. You're not an intermediate trader. That's what I can say.
Okay.
Yeah, you're not more a newbie. You're not an intermediate trader. Intermediate trader is someone who knows what he's doing. Market, at least, who can do one or two things with the charts and everything like that. You just need to perfect some of the stuff. That's an intermediate trader. Who is not new at all to chart again. Either is it new to risk management or anything about it. You don't need to anything. Either you don't need psychology, you don't need to risk management, you don't need to chart, you can do some stuff. Yeah. That's it, intermediate to them. Yeah. You're not my beginning. You are now intermediate. That's what I can say. Okay. Thank God we're able to do introduction to risk management. Right?
Yes, sir. Yes, sir.
We can hand it off today then check up the checklist for tomorrow's market. Super pumped, man, for this new week. I hope it gives us a good profitable week, man. Last week was crazy. We beat it up.
Amen.
Faster morning, man. Everybody was smiling in the bank. Not single loss like this. Up to like 16 trades. Not single loss. Everybody was just smiling. The VIP, everybody was smiling. Everybody was fucking smiling, man. It is well, man. It is well. Okay. I already gave an introductory speech on risk management, and which you know already, because you duplicated it to your colleague. So we just need to round off some things about, okay, once we talk about risk management, you can't talk about risk management without talking about account sizing. You can't talk about risk management, you can't talk about risk management without mentioning account sizing, without mentioning trade management, without mentioning risk appetite, without mentioning I say discipline, greediness. So you can't talk about it without mentioning some of those terms, some of those terminologies. Am I talking somebody? So you can't talk about it without those key stuff: trade management, account sizing, risk appetite, discipline, greediness. You know, some of those stuffs are very key, vital key that you have to put into considerations while you while you are talking about risk management. Good. And there is one thing I didn't even put. We milk something about the weekend, over last week. Let me put it there. Sir. This stuff I said I milk. Let me put it there. I know they put all these things there. I don't know why. We long it like, man, this thing gave me double money, double this profit. Give us all profit in the buy, double profit. We started making it from midnight and 11 till the next morning again. And the next morning again, we still took another buy again. And we also milk all this value before this one. I think that they came out from this place. Took profit, everything profit. I took profit here. When this second one came here, I didn't take profit here, this place. So we don't understand after profit. It's not going to the end of it because you don't know when to end. But once I see this thing, I didn't know that no. There is a tendency for what it is. I took profit here. However, what I'm saying, there is tendency for breakouts, break in, or continuation. If it doesn't break in, then it will continue. But once it breaks in, then it will sell. Do you understand? That's what I'm talking about. Don't worry, let me distract you. let's go back to risk management. Awesome. So we're going to talk about risk management without saying something of this. I think I entered around this place. Around this. And milk it like mad. And I stopped here. I thought investment. I entered around here. I took my profit at this point. It's a new entry at this space. A new entry here. Summer I added more pushing. So what I saw this. I came to 1 hour. So I saw this on 1 hour. I saw this on 1 hour. I saw this.
I noticed something in the market.
Yes, sir. What's that?
You can be trading support and resistance sometimes and it will be working, no?
Yes, now, when you have a ranging market, sure now. Why not? Sure now. Sure. It's a basic market for everybody. If you have a ranging market, you can be trading support and resistance. Why not?
And this is the kind of trade I like. This one right here. The sell.
Okay, from this place, sell it. For this place, but everybody now is laziness now. Everybody likes that. That's the beginning of what everybody knows.
I like that.
Until you change, everybody likes that. Once it comes to this, hey, a time will come to change. They want to change and you be confused. You know what to do, what to go again. That's where advancement comes in, and professionalism comes in. So funny. So when we don't talk about risk management without all those stuff, and then we have to come to this point, what we call account pips, what is it called? Maybe pips calculator is already there. So pips value calculator. Don't talk about risk management. You're talking about this because of what? You have to learn how to manage your risk. You want to learn risk management. Now, let's go to the pair you trade. Now, you say you trade GBPUSD now. For example, now, you say GBPUSD, you see size of position sizing. Now, let's say you funded 1K. You funded 1K. Oh, sorry, this is not the right one. Position. Sorry. This is the right one, sorry. You can use, mind you, you can use this one, guys. You can use my FS book as well. Sure you get?
Yes, sir.
There's also one too, cashback FOREX. Can use one too. I've tried this one before. I've tried this before, but I use this one mostly. But this PPP doesn't have gold. So if you are watching this over on YouTube or anywhere that wants to trade gold and you're not trading gold, you should be visiting this one. This one. This is my first book, and then any cashback. So you'll be able to see gold pair there. But if you don't trade gold or you don't mind, you trade any other currency, just like me, I trade any currency that gives me the good setup. I gave up on sticking to one currency. Anyway, I gave up or I changed my mind. I see that it doesn't suit well with me. Let me say that. Because this thing is a game of personality. Anything that suits well with you, you should continue with it. Yeah. So I trade the best setup. As far as I'm concerned, you can tell me in the market for whatever that brings money. Talking to for money, man. So that is it, guys. So let's say you have what's the visible account like this, that the visible account you used to trade, visible account, is it 5K, is it 2K, is it 1K, it's 10K?
1K.
Okay, let's say 1K. That is visible for money. 1K, good. Okay, good. Now I want to trade a 1K account, and then I want to manage my risks. I'm asking myself, I used to tell my guys two things. There is a way you can trade. It is either in two ways. We call one trading style of trading is called conservative. Whenever you're conservative, you are deploying what? Risk management. At a conservative trading, you are deploying total risk management. But whenever you're aggressive, sometimes you could be gambling at your aggressive times, and then sometimes you could limit your gambling to the appetite loss of, okay, even if I'm gambling, but if I incur this loss, I want to take care of my loss. Fine, that's good. That is a calculative risk. So people gambling, you don't even know what to take. Appetite for the loss and the gambling and the browser you see people doing accounts. Because of what? Even though you are gambling and yes, you don't even know the loss limit to take. You'll be okay. If I'm not to gambling, no, I don't even know how much I'm wasting. I don't know how much I'm just open a position. Just the open position they go. That's why you don't even know when to reach. And then if market traces back to you, or it traces back, or anything, and it's a particular. Yeah, that's why you see that for if you are trading profile, you must always have what daily loss. Or your own daily loss must even. I advise my students a lot that you should not have the same daily loss with any profile account. If it takes a 200 daily loss, your own should be 150 or 160. Otherwise, if you are sticking to 200, you just see that before you know, they have closed up your trade or send you email. Sorry, you have breached our account. You have validated our laws, our rules. How come so fast? So it's always advisable you have one. That is problem. Anyway, that's not the topic for today. So let's go back to our risk payment. So if you are what? If you have $1,000 account, okay, let's say, let me explain conservative trading first. Let's say I want to trade this conservatively. And I don't want to lose this money. I don't want to blow it away. I want to ensure I'm trading at least as of 1 week, 2 weeks, at least 1 month, for a good 1 month. Let's do for 1 week first. For good 1 week. But can I ask myself, how much do I want to risk? Normally, you are not expected to risk more than 1 or 2%. Like 1%. Depending on your risk appetite, some people can risk 5%. If this money, why the risk should determine if this money means a lot to me or not. That's the question. If this money means a lot to you, I also teach you something, Ayene. If you have a good setup and that is so for you, like this ones I should show you, can you see like 7, 8 complexes? I can risk 5% or 10%. I don't mind. Me, I would knock out. Right, talking to somebody. So I can risk because I know that the worst is this thing here, and I have a lot very small lot size to risk, small SL. I will not count because if you move, it will favor me. Right, talking. So if we have something like that, for me, I can risk if I see that I have a good setup with very limited SL, I risk 10%. So I can risk 20%. Bam! And also, I won't take. And if you hit me, I take on that. So you get, so it is your own choice. It also depends on what, on your type of person. Good. If this 1K for me is my last card of money, if I lose my family will my family will cry. If I lose this 1K, go to pay me, more, I go one cry. Definitely, you know that is very, very important to you. Like someone said that money is what's reality. 1K change to someone. 1K could be the highest money to another person. Whereas 1K could be someone else's chat card. 1K could be someone else's dinner. 1K could be someone else's breakfast. Whereas to someone else in a lifetime savings. So it varies. So the relativity of the money that you are bringing to the market will determine how well you do. Now, and okay, for example, say this 1K is nothing to me. And like I said, I want to risk even 20% or 30%, even when I see short trade. But if we know that 1K is the last card, even though if you see short trade, you have to consider that this is not 50 until it can start moving. There's no assurance for that trade yet. I feel it's crazy. Until you start moving, or even if you people say you can do small move of people and you'll still go against you. Public can move 10 pips, and from there, no plus. I thought it was going before. How come? That's market for you. So let me cut that short anyway. I believe you should understand beyond that anyway. Good. So let's risk, assume I want to risk 1%. That 1% of 1K is what? That's $10, right? Is that $10? That's $100. So I said that. That's $100.
It should be $10, 100.
No,
10.
That's $100. Is it 10?
No, it's not 10.
$100. That's 100 now. Right?
Sir.
That's 100, right?
I don't think so.
Let's calculate it now.
That should be 10.
then 100 now. It's 100. You can touch it as well. 1%. It's not 0.5. It's not 0.5. It's 1%. I need to see that.
Okay.
Okay, sorry. 10%. 10% is $100. 1% is 1. Sorry. Are you there?
Yes, sir. I can hear you.
1% is 1. 10% is $100. Yeah, it's $100. So that means if you are using 10%, this is very high. You have 10 chances because $100 in 10 places is 1K. That means if you lose one trade, second trade, third trade, if you lose in 10 places, you have blown this account. That's if you are sticking to what risk management. So that's if you are going by risk management, you have blown this account. But if you use 12%, that means it will take 1,000 times before you can blow this account. If you use 2%, though you'll be making, so even though you should take for blood, but you'll be making less money. Let's see how much you will make too. Because sometimes you're only because of the outcome as well. The outcome you want to make, now they make people the goodie. The outcome is low. If you are listening to 2%, that's all very low. So if it's very low, 10%, you'll be only $10. $10, make it $20. But that's so people are always like, it's low, there is no money. That is why you want to risk high. But it's not a problem to risk high. What I used to recommend is if you're risking high, ensure you're risking high on there are some trade that is called short trade. For example, I used to explain this to people. For example, you once play swap betting. This is where I can best explain to you so you can understand. You want to risk high. There are some trade that the time I used to bet, you know that even though just like you betting on Man City with some team, Man City will score 1K. Even though it's not Man City or any club, some games that I thought from that sporty bet that 0 point that they call it how do you call it how these guys used to do all this now point over 0.1 over 1.1. You always say that it's always sure that it will come. Maybe so
0.5. That's 1 goal.
That's 1 goal. So some of the lowest risks that you guys will take that it is so sure for that club not to happen. 1 goal you get. Or saying anybody can go. I don't know how you guys do about it. But there's something that some I know that some guys will do that is very, very sure that no a goal will come. Like, hey, I'm sure that when you see the team or the club, I'm so sure that nothing, I know this one. Not, even though I may not be so sure who will win, but this and this will happen. Because of what you are so sure of the historical record of such things. So you're so fucking sure. And your surety is at the minimum level. I don't know at all. This one will surely you get that kind of sure market, that kind of sure predictions, that kind of sure this thing. At all. You're not taking high and you're not risking like adding more this into that kind of stuff now. That's it. So in such truth, what I can advise people to jack up what their risks and you're having up as well. You're having what Excel is so low, you can jack up your risks. Because that's what I do. You can jack up your risks. And that is on what conservative, still on conservative trading though. But if you really want to be conservative, you don't mind whenever you make your account. If you're so conservative, you can start with the account normally. But account going 1 or 2% is good for both. Because it's good for a good account size. Let's assume this account is worth 5K. You see that it will make sense. 5K, 1% of 5K is what? That's $50. No, so that's how much?
$50.
50. Awesome. It makes sense a bit. No, so at least
sir.
Push for her. It push forward. That's it. So it will push forward. If you assume it's now 10K, it will push to $100. It's not making sense. Right? So listen, 1%, 2% is always good when you have what? That large volume. But if it is your personal account, I always advise you can at least, let's go back to our analysis. You are seeing 1%, 10%. Personal account, you can see this on this account. For it to make more sense, you can still risk 5%. 25%, that would be what, $50, right? No, so
Yes, sir.
it's $50.
Yes, sir.
Then you know, like, to take you 20 trades before you can blow the account. No, so
Yes, sir. Yes, sir.
it's not bad. It's still not bad. At least can't share 21, 1, 2, 3, and then usually if you're in a VIP, it's not possible. Where we don't even we are the lose. We are the lose, not possible. So you only be smashing it. So in such case, it's impossible. Good. So let us say you want to risk one. You put your stop loss. Let's put one first to see. Let's put one first. Your stop loss. Let's say you want to risk 30 pips. Your peer is what? GBPUSD. Now let's calculate. Calculate. Now they are telling you to use position size of what? As I say, you lose $10. Are you see now? That is for $1. They're telling you to use position, but they're telling you to use size of 0.3. Would you be willing to use this kind of lot size? It's too minute for many traders. Even some $100 gang say we open more than 0.3. Maybe so. I can tell you, I know guys. Trading, I know. Trading $10 guys we even open more than this lot size. Why even open it beyond for even good? And this is your last card. And you just say, I go borrow them. But when you go borrow yourself, you are trading it in a what? Aggressive manner. You are trading in a gambling way. And you expect it to remain forever. Gambling way, you made a profit and you can lose it as well. That's what you should know. It's good for professionalism. Those who are professionals, it's good for them. First of all, start conservatively. Once you are, because you will grow more, and then you cannot be gambling with it. You have money to even gamble with. Daily, at least I have $200 at least. You know, can gamble around it, and most times I win it over. Most times I end up doubling them. So what is I just wanted to gamble because I gamble if I see shortage, I will not gamble it. And most times you don't have to win it. You don't have to win it. So that is how it should be. Go to know the knowledge first before you approach gambling. You can also approach gambling if you are learning, except this is money doesn't matter to you. If it's something like, okay, 1K is not something to me, I can actually lose it, I don't mind. Then you can gamble with it, no problem. You can trade aggressively with that, no problem. So this will tell you what you will lose. You lose $10, it's standard loss to use, and everything. Can you see? Now let's assume, okay, this one is too minute for me. I want to be rational, like Nigerians, normal Nigerians now. To them, even 100 I said they'll use more than 0.3. Don't talk of say $1K. So $1K will boost them, but I don't get money now. $1K. Let's assume you want to risk 5%, and you still want to maintain 30 pips, or let's say 30 pips also. 30 pips. Now, how much will you be making? You lose what? $50. You are now entitled to use what? 0.16. This 0.16, you can divide it by 3 or by 4, depending on how you want it. 0.5, 0.5. In 3 places, that's it. And then you have one 0.1, then make it 4, that's it. That is also you have 3 entries to make. You enter 1, enter 2, if it's going your way, start 3. Enter 1 to test it fair. That's why I tell people, we don't enter your position at once. We newbies don't understand. You have that blah. I'm back to retest. You never even do 10 pips with this like this. Oh, it's done red. It don't deep red because of what you have done the wrong thing. So your first entry should be what public. Even though it's a short trade. Market is crazy. Short trade constantly will have divergence. I've seen short trade before. I will just have divergence. And after divergence, you could just keep going. Why touch with divergence?
No.
Just keep going. I must have explained to you. You don't know it's divergence. Market will consolidate. Let me show you. Market will consolidate. I see the video now. Showing that you want to consolidate. The time you just come, boosh, break it as if it's going down. Then from this breakdown, another green candle just open and come taller than it and begin to buy. And everybody will have stopped and stopped us and cut away stop losses, cut it away, go back, and then begin to we don't pay you. That's divergence. Divergence. But you that way you don't enter on your position. This ain't go. It's just cut everything you go down there and you lose. So if it is one, it will limit your loss. When you're not shorter than divergence, most markets will not come under it again. Just come and do another W, then move, bam, just put a support. Very limited, and you'll be wasting less. Even though that one, before you come there to come and be blue, you go take. Then you have what? New entries at a better entry here. Then by the time it's the blue from here, you don't cover your loss for here. And you are kind to good. And good to go. That's experienced trader. That's the difference between when you see those who are trading good, professional traders and just like traders. Am I talking to someone?
Yes, sir.
So that is for that. So let's say you want to reach 10% now. 10%. 10%. You want to reach 10%. That feels as well. Then you lose another $100. And this is still visible in 10 places. If you lose it in 10 places, you definitely blow the account. Now you have an avenue to what you are using I. You have to use 0.30. This 0.30 you can divide it by 3. You can use 11, 11, 11. You can divide it by 4. You can divide it by 6. Let me know how you want it, how you want your entry to be. You can divide it by 5. That means you have entry for 6 or 7. 5, 5, 5, 5, 5, and 6 places. That's 30 places. That's like 6. There is still 3.3 as well. And the last one also 3.3. That is 7. So depending on how you want your entry to be, can divide them and then you need to enter it in small bits. Once you are sure that the movement is certain, then you just continue go Sama, Ama, Koba, Sama. That's it. Am I talking to somebody?
Yes, sir.
So let's now assume that you want to reach 20 pips now. 20 weeks. You want to reach 20%. 30 pips as well. So let me also teach you something. That means you have access to what is 0.66. You can use $20. In 5 times, if you lose the trade, the capital, you blow this account away. Now, let's assume you are now using 20 now. The one thing I want to teach you about is that your risk management, your percentage work is your stop loss. The more you are risking, you should be willing to list less, to have a less pips. If you have a less pips, it will also pay you. See now, I'm risking I now, 20 pips. If I have what? 20 pips as my stop loss, you should say you can pay me more. Let's calculate it. Can you see? I can use what? I can use one stand loss size. And I'll still lose what? I'll still lose the same $200. If someone needs I'll still lose the what? $200. How is what? If the 20 pips doesn't hit my stop loss. If I'm missing less, I'm missing I can still lose. I can have access to what? To this what? $1 loss size. Imagine I can divide this one to 5 places. 20, 20, 20, 20, or 40, 40, 20, or 50, 50. 2 places, that's all. You are referring to what? To use one standard lot and you still lose the same thing. Just now assuming I have this very good sniper entry and I'm missing very less, 10%, 10 SL alone. Let's see. I have what? This 10 is very unrealistic rather. But it's feasible. Very unrealistic. It's very slim. But if you eat your stuff, I go to pay you.
If it's your stop loss, then go to your
it will pay you, go pay you. Yeah, it will pay you. I know what I'm talking about, man. It's too tiny, man, but it's crazy. It's very sweet. It's very sweet, but it's crazy. Very sweet, but it's crazy. Imagine you have access to what? $2 lot size. Come on. If this one go away, that song, before you do 20 pips, you don't make crazy money. Imagine you shaman like 0.50 in 4 places. Go back. 10 pips like this, you don't make almost half of the money, almost quarter of the money. By the time you go 20 pips, you don't make more. So that is how it's being done. That's how it's been done. That's how it's been done. Let's say I use less now. I use 10 pips. Then I'm using 10 pips as well. It will increase me the more. Can you see? 10 pips and 10 pips. I have $1 size and 1. Let's now assume I'm using 20 pips. I'm having 40 pips. This SL will make it higher. It's not balancing. If you are risking I, and this is also I, you should be aware of your let me calculate it. Aware of your what? That lot size. Can you see? 0.5. And you can lose what? $20. Let's assume I'm using 40. I'll be 50, half of it. Then I'm using 30 pips, 30 SL. So do you understand, sir?
Yes, sir. Yes, sir.
Use 1.5 star lot size, 1.6, and what? 50. Once I do 2 trades and it's gone, I'm gone. So that is for what? Conservative. depending on what you want to risk actually. This is not conservative, but you're wasting 50. Don't try it though. Conservative is around 10%. Depending on the account you have size ahead. Just showing you very varieties from all those stuffs. Now let's log into the next one. I want this one to close so we can talk about the aggressive one. Is that clear?